What if the future of insurance and employee benefits isn't just about broking deals, but about harnessing AI to reshape entire industries? That's exactly the bet Willis Towers Watson, WTW, is making right now. WTW is a global consulting, broking, and solutions powerhouse, headquartered in London and listed on the NASDAQ. With 49,000 employees across more than 140 countries, they serve most of the Global 500. In Q3 2025, WTW reported $2.3 billion in revenue, with organic growth at 5%, and adjusted diluted EPS up 11% to $3.07. But the real story is how they're shifting from traditional broking to a blend of data, consulting, and cutting-edge technology. Let's break down their AI-driven product lineup. Embark is their SaaS platform for employee experience and benefits, powered by an Azure AI assistant that answers personalized benefits questions. For HR teams, Expert Pro is an AI assistant that drafts HR content, job descriptions, and delivers real-time pay benchmarking using WTW's massive compensation database. Radar 5, launched in October 2025, is insurer pricing and underwriting software that uses generative AI for natural language portfolio queries and transparent, regulator-friendly machine learning. Rescue automates long-tail risk estimates for property and casualty insurers, while Climate Quantified translates climate risk into financial impact, supporting CSRD and SEC disclosures with proprietary models. And with the recent acquisition of Flowstone Partners, WTW is expanding its investment capabilities, giving clients access to private equity secondaries for better liquidity and lower entry hurdles. So, how does WTW make money? About 60% of revenue comes from health, wealth, and career. Think employee benefits, retirement, and HR consulting. The other 40% is risk and broking, including insurance placement and advisory. Their fastest-growing segment is insurance consulting and technology, where software like Radar 5 and Rescue are moving the business toward a SaaS model. Why does this matter now? The industry is an oligopoly, dominated by Marsh, Aon, AJG, and WTW. But the real differentiator is the shift to AI-enabled software and advisory services. WTW's management is targeting 5 to 6% organic growth, margin expansion to 24.5 to 25.5% by 2026, and double-digit EPS growth. By 2027, over 60% of their ICT segment is expected to be SaaS-based. Strengths? Scale, deep enterprise relationships, and differentiated data and software embedded in client workflows. Risks? Fierce competition, regulatory scrutiny on AI pricing and climate disclosures, execution challenges in reinsurance and integrating Flowstone, and pricing pressure in the mid-market. For investors, WTW's story is about a global leader using AI to drive a mix shift toward higher-margin software and advisory while rebuilding its reinsurance presence. The upside? Potential for steady growth and expanding margins, if they can execute on this transformation.